Okay, hi friends, and this is Omkar here from Maverick Trading Blog. First of all, let me tell you that I'll be updating my blog regularly now, and you could follow it every day for trading ideas and news, etc. The video that uh, I'm doing today, right now, is on how would you trade uh, pound dollar pair or GBP pairs heading into the Brexit referendum and even post Brexit referendum. So the first thing that I would like to state in this video is, you know, uh, whether or not UK stays in EU or whether UK leaves EU, the sentiment in the market is that in the long run it would not affect much to the UK economy. Mind you, no one is talking about the impact on eurozone or other European economies. But in the long run, even if UK exits EU, experts, most of the experts say that it's not gonna do any damage to UK as such. But from the trading perspective, the liquidity is likely to remain very thin heading into the June 23rd referendum. And as we have heard time and again, most of the people are betting on a 15 to 20% drop in pound if Britons do vote in favor of Brexit. However, these forecasts of a 15% or 20% drop, they have hit the markets when majority of the people did not know the fact that the Brexit referendum is not binding on Parliament. To simply put, even if Britons vote in favor of Brexit and the exit vote wins, that doesn't mean that Parliament has to accept the outcome of the referendum. The proposal needs to get passed in the Parliament, and it is interesting because it will take only 30 Tories to vote down the proposal. So the situation now is that even if the exit vote wins, there is a very low probability that the vote would be exit vote would be accepted in the Parliament. And what that means is, markets now have started realizing this fact, and there's a high possibility that pound would actually stay resilient, or the outcome outcome of the Brexit, it would just end up being a non-event as well. You never know, because now now markets know the fact that there's the proposal needs to get passed in Parliament. So the referendum more or less becomes like just a sort of a show rather than and it ultimately, whether UK stays in EU or exits EU, depends on if the UK Parliament accepts the proposal. Now coming to polls, sure, polls would create a lot of volatility in pound, but do note that polls tend to be erratic, and over the last few days, as we have seen, the polls by themselves have become very volatile. One day you have exit vote in lead, the next day you have remain vote in lead, and what that has done is it has sucked out the liquidity from the GBP USD pairs, courtesy of which we saw a big blast higher today in Asia. Pair clocked a high of 1.4660 and then deflated to 1.4550 levels right now. The other thing that you'd want to sort of note down is that polls have started showing a shift towards exit, but the bookies, Brexit bookies, they are speculating like 5-2 in favor of remain vote. Bookies, according to bookies, there's no chance in no chance whatever that UK would exit EU. So now whom to trust? So obviously the question arises whom to trust, whether the Brexit polls or bookies. If you go by the historical records, bookies have been more successful in predicting the outcome of referendums or elections and that those sort of things. So it makes sense to trust the judgment of the bookies here, and that's why I personally feel we aren't going to see any. Uh, there's very little chance that Britons will vote in favor of uh, Brexit. It will be a tight contest, the way it was with Scottish referendum. I guess Remain vote will get around 52 or 55%, and exit vote will gain around 46 or 48%. So obviously it will be a tight contest. The third point that I would like to state is that the fear mongering is going to persist, and it may actually get intense moving ahead. The simple reason is that you simply don't sell papers, use newspapers. You simply don't increase the TRP of the news channels by stating the fact the way it is. If news channels or the newspaper start saying it as it is, that bookies are more accurate, and they are predicting victory for in vote, and even if exit vote wins, it needs to get passed in the parliament. No one would buy the newspapers or TV news channels. Their TRP would go down. So expect a hell of a lot of scaremongering from both sides of the Brexit referendum, and expect a lot of volatility in pound, especially because volumes are low and they are likely to dry even further heading into referendum, and which will be immediately followed by a Fed rate decision. And now then we'll talk about how do we trade GBP USD pair. So in front of me, I have a GBP USD daily chart. First of all, I would like to say that I'm using FXCM Market Scope software. I really enjoy using it. It's one of the best out there. Okay, so coming back to GBP USD chart. This is a daily chart, and let me just switch on to a weekly chart for a moment. I'd like to show you one important trend line. So this is the trend line that I have drawn. Let me change the color so it kind of becomes more easy. This is the red trend line. As you can see, I've drawn from a high of 1.7191, and that was July 2014 high, and June 2015 high, that is 1.5930, and extended further. The resistance comes around 1.4590, or let's say 1.46 levels today. Now if we observe from June 2015, post June 2015, the numerous attempts were made to take out the red trendline resistance, but every break higher was met with offers, and those offers made sure the pair stayed inside the trend line on the weekly closing basis. So far we haven't had any weekly closing above the falling trend line. Okay, the red falling trend line, and so that for me that becomes an entry. I would go long on GBP USD if I see a weekly closing above a red trend line. So the immediate question then that comes to our mind is that what about the black trend line? It's just I'm not pretty sure about this black trend line, because it's just a August weekly high of around 1.5819, and currently the resistance comes around 1.4850 or so. What I believe is that we have a rising bottom formation on the charts right from February lows, and if this is followed by a weekend closing above the red trend line, I guess the black trend line would be breached easily, and we could move to around 1.5 levels. So for me, the entry on the long side happens only when I see a weekly close above the falling trend line, the red one. So coming then, what about the short entry? I would love to enter into short once this black rising trend line is breached. The support currently comes around 1.4310, 1.4320, and it could stretch up to 1.4420 till 25th June. So that is, a level that goes. 25th June is a date that goes past referendum. So till referendum, anything around 1.4330, 4350, it keeps on moving. On June 20th, the rising trend line support comes on 1.4375. So as long as I do not see a daily close below the black rising trend line, I would avoid getting into shorts. So at the current juncture, at 1.4548, I would stay out of the pair, for the simple reason because it's stuck between a larger falling trend line and a smaller rising trend line. So anywhere between these two trend lines, it's a no trading zone for me. I would love to enter long in case of a daily, not daily, weekly closing above the red trend line, and I would love to enter into short once I see break below the rising trend line on the daily chart. So that's the trading strategy that I would like to pursue in GBP USD. The another point I would like to state is that on the higher side, I might think of entering into, long, looking at the day in closing, especially if the day in closing is above the red trend line. However, I would, be very, very cautious because as we can see in the past, since August, in September, we have in October, November, we have had multiple day end closing above the red trend line, but each of them failed and failed miserably. The failure was followed by almost a 400 to 500 pip drop each time. So if it fails again, we could go down to around 1.40, 1.41 levels. So this is my trading plan on GBP USD. The other thing that I would like to state is that given the uncertainty surrounding referendum, pound becomes vulnerable against other measures, especially when markets are witnessing a broad-based USD selling. So whenever you have a horribly weak data or dovish comments from Fed officials or a sharp fall in Fed rate hike bets, you can easily buy euro and sell pound, buy Australian dollar, sell pound, buy Canadian dollar, sell pound. You can sell pound against other measures because the Brexit overhang is likely to see the pound underperform other measures during the bouts of broad-based USD selling. So that becomes a very attractive trading opportunity. And of course, whenever you have hawkish comments from Fed officials or even a possible Fed rate hike just 2 days before the referendum, the obvious trade is obviously GBP USD shorts. Once the another point I would like to state is once the rising trend line is breached, the immediate target that comes to my mind is around 1.4130, 1.40 levels, and obviously 1.3835. Once 1.3835 is breached, the next major support directly comes on 1.3654 levels. So mind you, it's a big level. The short entry, the confirmation for short entry could come something like this. You have a false break, another false break above the falling trend line, which ends up, as I said, it would be a false break, and then it could be a false break, and then the subsequent move would see the pair break below the black rising trend line. So that would be a really bearish signal. So that's it from me today, folks. I hope you enjoyed, and do comment on the video, and that's it for the day. All the best and have a profitable trading experience. Thank you.